Challenge of that and why they need professional input.
Well, of course, I believe you need professional input. No, it's one of those things when you're starting up a business where you say, well, I understand there's cash flow issues. There's always a delay in revenue. Once you start your business, it's not like in most cases revenue is realized day 1 or 2. It takes a prolonged period to get revenue, and it takes a while for that revenue to equal your expenses. So people try to cut expenses as much as they can. But it's very important that if you want other people to take your business serious, that you do as well. And one of the, some of the necessary things that you need to go through is you need to make sure that you're forming your business correctly. And that is getting an attorney involved, getting an accountant involved. Business is all about relationships, and it is good to build these relationships right at the start. Someone that understands you, understands your goals, understands where you want to go with this business, and learns business with you. So I think it's very important at the early stage to find an attorney that you trust. You certainly need to find an accountant that you trust. And those relationships will pay off going forward. A mistake, a lot of people want to form a business. They don't really think about, well, what entity am I going to use? How am I going to structure this? Where am I going to be located? And it is an important decision because that type of decision can have an effect further along. I do have some handouts that you can grab over on the side, and I'm also willing to email them to you. My email address is bob@Graham and Penman. You see the Graham and Penman, it's GRAHAMANDPENMAN.com. Just send me an email, I'll send the 2 handouts I have, or you can pick up a hard copy. But one of them talks about entity selection, and in talking to accountants, the classic scenario that you'll usually be discussing is an LLC versus an S corp. It's a creation under law that created by statute that you just file with the Secretary of State, and you come up with an operating agreement which governs how that entity is managed, how the interests are owned, everything like that. An S corp is a corporation. At the Secretary of State of Georgia, you file a corporation. And then you do a special filing with the IRS, where you elect to be treated under Subchapter S. What that means is there's 2 different kinds of corporations, a C Corp and an S Corp. A C Corporation is like Coca-Cola, all these big companies where it's taxed at a corporate level, and then any dividends out to the shareholders are taxed at the shareholder level. It's the double taxation concept. An S corporation, files returns, but it essentially files a partnership return. It's treated the same as a partnership in most respects. And so all the income passes through to the shareholders. So if the company made $100,000 over the last year and there are 2 shareholders, there are 50-50 owners, each shareholder would get $50,000 income. And that's regardless of how much money you actually get out of the business. And so that's the issue of phantom income, where you decide to only pull $20,000 out of the company, and yet you still have $50,000 of income that you need to report to the IRS and pay taxes on. So, that's some ways where a C corporation may be helpful. But it's important to understand the differences between a C corporation, an S corporation, and an LLC. And the most common for small businesses are LLCs and S corporations.
The first 4 letters, ABIL, those are the people who will help you to manage risk. And it won't surprise you, the A stands for accountant. The B is for your banker, the I is for your insurance agent, and of course from this panel you know that the L stands for who? Your lawyer. Okay? Now, because I like to talk about growth and not just compliance and problem solving, I finished the word ability as an acronym. The I and the T stands for an investment advisor and a tax advisor. And the Y at the end, of course, stands for who? You. because you have to manage those relationships to build a successful company. So when you're looking at getting those structures in place, that's the support team that's recommended for you to be able to grow your business over time. Now, one of the other distinctions about structuring your business and the tax issues in a small business is, how do you get an official start? When does somebody need a business license? When are you going to need insurance for your business? How much risk are you taking on? How damaging potentially could your product or your service be to the well-being of the client? Those are just a few of the issues that have to come in people to learn from the prior experiences of those of us on the panel. So I'm going to ask each of the gentlemen if first they would tell you what's the #1 hard lesson that they learned in structuring their own business, and then secondly we'll come back and we'll ask what was the #1 piece of advice. If they could only give one piece of advice, what would that be? Now, I've talked with the management team for today's event, and we are going to send out to you a master list of all the vendors and all the speakers. So you'll get everybody's contact information, and we welcome you to reach out to the people who are part of today's support teams, okay? So, Mark, how about you first?
I have a question. How are LLCs taxed?
Yeah, well, with LLCs, they can be taxed two ways, generally. If it is a single member LLC, it can be a disregarded entity for tax purposes, which means you would file everything that is associated with the LLC on your tax return under your Social Security number. It still exists as a legal entity, and it's absolutely critical, if there's one point that you do get from here, is that you need to form an entity for liability protection. If you are just out there doing business yourself, all of your personal assets are out there for creditors, people injured, products liability, whatever, to grab. So that's why you want to form that separate entity. But an LLC could also be taxed as a partnership when it has more than one member. So it is similar to an S Corp in that respect when you have more than one member.
So if the organization makes like $100,000, like you said, and an S Corp is split 50-50, so they have to take $50,000 and apply it towards their taxes.
Well, yeah, it can be.
Okay. So an LLC, two-person LLC is done the same way?
Essentially, but the thing with an S corporation, it's stock ownership, right? So if you own 50% of the stock, you have 50% of the taxes, essentially. If you own 30%, it's 30%. An LLC, though, is essentially an entity by contract. It can be